Hello, welcome everyone. This is Seewing my co-host Richard Vanny from Guarantee Rate Mortgage. Welcome, Richard. We have a very busy day, so let's get to the point and a lot of things to discuss. Let's go over our realistic forecast. Seewing realistic forecast for the rest of this year and next year, and even long-term a little bit. And I'll give you my recap. And then, Richard Vanny, I'm going to have you create your own crystal ball. What is your real estate forecast for the rest of this year, 2023 and 2024, and the mortgage rate, and then even long term? Let me give you my quick recap, my summary. I wrote this down because you and I, we practice turnkey out of state investing, 1 to 4 units, the best asset class over and over again. There are other asset classes out there, short-term rentals, Airbnb and flipping and commercial and multi-units, whatever. I practice 1 in 4 units, which is the most favorable asset class, single family home, duplex, triplex, fourplex, because I've been doing it for a long time. This is the most popular, most attractive, long-term wise is the best. That's my belief. And turnkey system, especially buy in the right markets, cash flow markets, surround yourself with a good team, Midwest, South, and Southeast, and the whole 9 yards. So here's my prediction in the future. The rent and cash flow, and we could achieve single-digit appreciation, 3 to 5% overall, and especially in the market that we are doing, Midwest and South and Southeast. Let me see what else. And the other thing I'm predicting is that some market will be flat, yes, especially in the western region of the U.S. We still have a lot of volatility. It's a cyclical market, if you will. The mortgage rate, I predict, hopefully by the end of this year, will be 6%. Next year, maybe high fives, hopefully. Anything lower than that, it'll create chaos. I don't want that. It will be an unhealthy market. And also and the future is very bright because we have a record low supply inventory and a pent up demand. And for years and years to come, you're right. This will be a seller's market for the next 10 years or more. I say seller's market. This is economics 101. For the next 10 years, people, especially investors, buy right now, they're going to reap the benefits, multi-dimensional benefits, especially the way the system that I use. Yeah, that's my prediction, short-term and long-term. What about you? Since you're a loan agent, you understand the mortgage market, the mortgage rate affects a lot of people. But then again, the property we promote, 100 grand, 200 grand, the mortgage rate between 7% or 6% is only a few dollars per month cash flow. So investors should not focus solely on interest rate. It's all about the big picture. You buy much more than cash flow. So that's my recap. I know you got to go. Everybody's busy. So what are your big picture real estate forecasts from your perspective?
So I actually foresee something that you don't want to see, right? I think moving into next year, rates are going to drop pretty significantly from where they are right now. And that is going to cause some pandemonium out there, right? Inventory's low, as we know. Even when rates drop, even if they drop sharply, let's say rates drop to the mid fives from around 7%, which is a huge drop. Keep in mind that's still not going to cause a lot of people that add 2.5 or 3% interest rates all of a sudden to sell, right? So that's not going to create tons of inventory because once again, people still aren't going to want to go away from their low rates. However, it is going to create a buying frenzy because there's still going to be limited inventory. All these home buyers that have been on the fence or rates went up, now they don't qualify for enough. As rates move down, they're going to become very engaged again. Once again, remember the people that aren't selling now probably are still not going to sell either. There's going to be an even bigger buyer pool with an even smaller amount of properties. I see property values at least, I wouldn't say maybe rallying because they've gone up so much. I see a temporary rally next year in property values. And then I see them starting to move back to a nominal appreciation of 3 to 5% a year nationally. Now, what we're not going to see is the crash or even a big reduction in property values. I know a lot of people have been waiting for that. I'm sorry, it didn't happen. It's not going to happen. It's purely fundamental supply and demand. If we hit a major recession and depression, will real estate be affected like everything else? Yeah, probably be the least effective in any other asset class based on history and based on all the data that we've seen in the past. But there is no major crash coming, and properties are going to continue going up in the short term, and I think into the medium and the long term, because we are in a housing crisis, and the housing crisis is not just that there's not enough homes and people can afford homes. It's that we are not building enough homes, right? We're not digging ourselves out of the hole we're in. And in the next 10 years, we're not going to be able to dig ourselves out of that hole. So that supply and demand issue is going to continue. And if you're investing in real estate for the long term, which most of us are, right? 10 years, 12 years, 15 years, 30 years, whatever it may be, get off your butt. Now's as good a time as any, because if you do buy something next month, who cares if they move down a little in the next 2 years, 3 years, 5 years, which once again, and I'm telling you, it's not going to happen. Tell you they're going to stay stable, they're going to move up. They did. If you're not selling, who cares what someone writes on a piece of paper and says the value is? It doesn't matter. And my projection is real estate's going to remain robust like it is. Do yourselves a favor, pick up the news and read a headline from a year ago, and you'll see any headlines from any media from a year ago up until about 2 months ago. And you will see the misinformation they were giving, right? Doom and gloom, real estate crash, house values down, all this nonsense, right? And meanwhile, see, we're saying the opposite, saying that this is bullshit. And actually read the body of the article. Home sales declined third month in a row. Well, so you read the article, second paragraph, the percentage of home sales is down. The projected sales were supposed to be 8%. Now they're 3%. But nationally, home values are up 2% year over year. Okay, so nationally, home values are up. And then you read the headline, right? Home sales declined month over month. They're talking about the number of homes that sold, not the prices, right? So misleading, so misleading. Don't believe the media. Don't believe everything that you hear out there. Use your own brain and stop just looking at headlines, because those headlines are what pushed a lot of people away from investing in real estate, and it costs them a lot of money.
Absolutely agree. There's nothing more I need to say. Yeah, negative headlines, all the clickbait, home crash bros, YouTube viewer providers out there, they are doing people a disservice, and people that watch these clickbait, negative headline, doom and gloom, they will miss their American dream. And that is the bottom line. Thank you so much, Richard Avani. Thank you for your great analysis. With that said, nothing more we need to say. Hopefully you enjoyed this presentation. And this is Seewing Yi and Richard Avani. Thank you for watching. We'll see you next time. Have a nice day. Bye-bye.